Okay, now let me come to the last discussion of your paper, which is in the question 2. Question 2, and if you have before this paper, the last paper discussion, even in the discussion, I have highlighted, please go through it on financial services. It has not tested from the December 2018. Then in that your latest paper, it has tested. Very easy, Lamai. Why? It's from the Gazette. I'm not telling by looking at the Gazette, okay, you all can do it without having a Patris. But if you had a Patris on this, then why don't you do this question for 13 marks? I'm 100% sure all of you all can take the 13 out of 13. That much, it's easy. Okay. Now come to the details of the question. Let me come to one by one. I'm not taking the Gazette separately, but I will take the format as it is and I will do. Now come to the requirement of the question. It is 13 marks. You can see the allocation of the marks. It is 13. Then what you have to do, assess the VAT liability on financial services for entire year. Year ended 31st December 2021. If you know this, we have to do the final adjustment for the VAT on financial services, interim adjustment in the biannual, and all these things are there. Then the taxable period is for this is the year for us to go with the annual adjustment. Okay. Now let me come to the details of the question. That's why I am repeating, you shall not take the selective learning. If you have go for the selective learning, even lecturers done that, if the students don't take it much seriously, then it's really unfortunate of the students. Then don't do that. You cannot take a chance. Then it's a 100% syllabus given. Please go through of this 100% syllabus. Now come to the question 2. Friendly Finance PLC, FFP, it's a quoted public company. Then a finance company is a finance company incorporated with a vision to offer more friendly and customer oriented financial solutions. PPF is a company listed on the Colombo Stock Exchange. You are provided with the following financial information for the year ended 31st December 2021. This is the period which you need to compute your income tax liability. Sorry, value added tax liability, not the income rate. It's suddenly income tax to VAT. Then sorry for the wording. Then extract of the income statement, interest income and interest expense, the net interest income, this is the bank, fee and commission income, net fair value gain, loss from the financial service, it is there, other operating income, note number 3, you need to refer note number 1, 2, 3, and we have total operating income and we have the impairment charge for loans, advances and other receivable, then the net operating income and the particular expenses given, and VAT on financial services charge. And there is a one key point which you have to take into your computation, profit loss before income tax. This is the figure you have to start. This is not a normal VAT calculation. This is a VAT on financial services. When it comes to VAT on financial services, what you need to do, Lama, you have to go with the value addition. You have to go with the value addition. Then when it comes to the value addition, how to compute the value addition? Then in the value addition, there is a Gazette notification. Then we are paying the VAT based on the value addition. Value addition. To compute value addition, there is a Gazette. All of you all know about this Gazette. Then the method of calculation, if I have taken, the method of calculation is given in the gazette. Okay, method of calculation. Method of calculation of what? The value addition. Value addition on what? Value addition attributable to the financial services. Value addition attributable to the financial services. Now this is the finance company. There may be or mostly there are income from the financial services. Now you have seen that income from financial services, and we have income from other than financial services. Other than financial services. What you have to do, you have to compute value addition attributable to the financial services. Therefore, from the total profit before tax, after doing this value addition calculation, you have to take the proportion applicable to the income from financial services. Then that what we have to do, all this format, everything given in the gazette. Then please refer to the gazette. Let me start the question with the profit before tax. This is my starting figure 3832. This is the Friendly Finance PLC TIN computation of VAT on financial services liability for the year ended 31st December 2021. Then I am starting from the accounting profit before tax. It is given in the question 3832. This is that. Then at accounting depreciation, this is a format is given in the gazette. We have to add the accounting depreciation, VAT on financial services charged to the income statement. Charged to the income statement. And the emoluments payable. When it comes to the emoluments payable, even it's the cash benefits, even it is non-cash benefit, even it is terminal benefit, it doesn't matter, all you have to take. Okay, now let me extract those things from the given question. In the question, let me come to here. Interest income breakup given. Now why we need this income breakup, Lamai? You need to separate, as I have mentioned here, you need to separately identify income from financial services as well as income other than the financial services. That's the first step. From the income details provided, let me start with that. Then interest income, in that term loan and other advances, it's from financial services. Balances with banks and financial institutions, that interest income is with it's from the financial services. Finance leases and hire purchase. For this one, Lamai, and this interest on overdue rental 44,544, this too we need to look at whether there are the agreements periods. The agreements entered the prior to the 2014 October and no after, we need to look at. We will come to the notes, okay. Then note 2, fee and commission income. This is guarantee fee, insurance commission, service. These are non-financial. These are not from the financial services. It's in the note 2, which is here. Fees and commission income. Then the third one, other operating income, dividend, profit on sale of plant and equipment, rent income. See the name, its name itself, other operating income. Then these are not from the financial services. And it has given personal expenses for us to take the correct emoluments payable into consideration. And next one, now the adjustment. Interest income from finance leases and interest income from overdue renters of rupees 7.5 million and 375,000 respectively relate to lease facilities provided prior to 25th October 2014. Why? What is the importance of this? The importance of this is for any lease agreement entered prior to 25th October 2014, this rental income, not the interest, but the rental income will be liable for what VAT? Normal VAT. It is liable for normal VAT. It's not for the VAT on financial services. Now you have seen that there are such kind of the income in here. It has given the finance lease and hire purchase interest on overdue rentals, then it is there are lease agreements entered prior to 25th October 2014. Interest, you have to remove 7.5. Overdue rental interest, you have to remove 375. When the calculation doing, I will come to that. Then the next part, which is the PPF has recognized right of use assets based on the initial application of the SL3 16. It is not relevant for our calculation. Then fourth one, economic depreciation calculated for the year ended 31st December 2020 was 2,079,000. This is for opening. This is my last year. Then this is the opening for that. To 2021, this is opening given, and none of the assets were fully depreciated at the end of the 31st December 2021. Then this we can take this 2 million as it is for our calculation. Then afterwards, what it has given, the following assets were purchased during the year ended 31st December 2021, furniture and fittings and laptop. According to Gazette notification, we have to provide the capital, not the capital allowance, but the economic depreciation, but the capital allowance, that rules not apply, or restrictions not applicable when computing the economic depreciation. Please go through the Gazette. The proceeds from the sale of the plant and equipment was 3.2. Now, first thing in the question, let me analyze the financial service income and non-financial service income. Come to the answer. Okay, before anything, here I am doing notes, separation of financial and non-financial service income, where it has mentioned in the section 25 subsection F. Financial service income and the non-financial service income and the total. This is as per the income details provided. Now let me come to one by one. Term loan and other advances is the financial service. I have taken it to financial service and in the total. And the balances with banks and financial institutions. Financial services, total also financial services. Then the finance lease and hire purchase. From this, you have to remove what? Non-financial service, the 7,500, while there are the lease agreement ended prior to 25th October 2014. Now done. Then the financial service is the balance, non-financial 7,500, total given in the note we have taken. It has given the note financial services other than lease agreements entered prior to 25th October 2014. Done. Then interest on overdue renters, the same application in that 375, it's from the which is on the agreements entered prior to 25th October 2014. Then thereby you have to remove this finance lease and hire purchase from this value, sorry, interest on overdue rental from this value 375. It is 44,169 for financial service, then non-financial 375. This is the total into consideration. Yeah, total is correct. Now, I have taken separately for all other without the taken much time. Fees and commission, other financial service. I have taken fees and commission and other financials, and the other operating income total 31,475. Other operating, I have taken it under the non-financial. Now, this is as per the income details provided in the P&L. All we have taken. Now, my total income is this, non-financial, this, financial, this, then the percentage of the VAT on the VAT on FS for total revenue, financial services as a percentage to total revenue is this, 93%. Now, let me start my calculation. Starting from the profit before tax, not like the usual tax computation. Accounting depreciation, we have to add back where it is in the P&L. It has given depreciation and amortization of the intangible asset of the PPE and the intangible both together is my value. Do not take the right of use asset, it's not applicable. Then 4378 plus 3285 taken. VAT on financial services charged to the income statement, it is the 6,747. Then 6,747 done, and the emoluments payable, it's in the note. This one note for personal expenses, under that emoluments payable, salary okay, overtime and allowance okay, leave encashment yes, staff medical expenses yes, EPF and ETF yes, provision for gratuity yes, but staff welfare and consultancy fees to external consultant, these two are not the emoluments payable. 129,607, from that staff welfare and consultants, with these two you have to remove. Then let me take it under separate note lamai. In this, let me come to note 3, which is the emoluments payable, EPF, gratuity, staff salary, overtime, leave encashment, staff medical expense. This is the total I have added. All the additions done. Now let me come to the economic depreciation calculation. Opening we have, it's given in the question 2079. Now furniture and laptops given the addition. It's not the capital allowance rate. Furniture and fittings according to Gazette 12.5, laptops, it's a computer accessories 25%. Then same I have taken, and this is my economic depreciation. Now it's really easy. Value addition with VAT. This is the value addition with VAT. Why with VAT? The VAT on financial services is included in here. VAT on financial services included here, then this is with VAT. To remove VAT, then value for before that we need to take value addition attributable to financial services by taking 93% of this. Okay, then we have take the percentage 93, then taken from this the 93%. This is a value addition attributable to the financial services. From this we need to take the value addition without VAT, 126 divided by 100. This is asking for up to December, then it's a 15%. From 1st January it was the 18%, then 115 into 15%. Then it is the 16, this 464, we need to deduct this. This is less, we need to deduct this. Then after deducting this, my value addition without VAT 109,758, VAT on financial services 15% on that. The same amount is coming, which is the 16,464. Okay, this is very easy calculation. If you all have Patrice with and if you all go for the exam, then it is the very easy for you to take marks. Okay, now with this, let me conclude the first part of the question 2, which is the computation of the VAT on financial services for 13 marks. This has completed. Okay, now let me come to the second part of the discussion of the question 2. Again, two kind of the VAT question on the normal VAT with reference to two hot topics. Okay, then this is the question 2 which we have finished off right now, and this is in that part B. In the part B, how many marks? For 5 marks. It asking, let me come to the requirement. It asking on advice EESSL. This is our company, EESSL, on whether first one, okay? They are eligible to claim VAT exemption or the zero rate per the provisions of the VAT Act duly amended. That's the first. There are any consequences for past periods? This is the question. Now, for this reading this requirement, it's not clear, but you maybe think, okay, the exemption claim in application of the zero rate, and what is this? There are consequences on the past period. Now, for this, Lamai, we have to need to read the facts of the question very carefully. What are the facts of the question? The paragraph given. Establishment of Engineering Studies Sri Lanka. That is our company. EESSL is a branch office of the Establishment of Engineering Studies Australia. Now, don't be panicking, okay, this is a branch of it, this is non-resident. Without thinking anything, you have to read the facts of the question. What is the head office? EESA. We are having EESSL. This is, I should provide answer. This has the head office in Australia. It is EESA. EESA conducts, now it's talking about this one, not our one. EESA conducts graduate programs for students who all over the world, okay? Students are permitted to follow the first 2 years of the graduate studies in their own country with lectures being delivered using an online platform. Assessments and evaluations are conducted by a panel of experts of EESA. Lamai, this first paragraph, details given on EESA, not the other one. Students are required to work 2 days per week in a partner organization in Sri Lanka from the second semester onwards in order to obtain practical experience. The third year lecture programs and practical sessions are conducted in Australia. This is totally about this company. Now I need to come for second para. EESSL, the branch office which is in Sri Lanka. Okay? EESSL is involved with students enrollment work in Sri Lanka. First one. Secondly, and find partner organizations for practical sessions of the students. Second. Third one, it's a find partner organization for practical sessions. It's done. However, evaluation of the technical competence of the partner organizations is performed by the technical team of EESA. Then EESSL, our company, conducts an open day each year for reach out to students with the participation of the partner organization. Third one, what they are doing in Sri Lanka. Now, whether to evaluate it is exempted or zero, lamai, we need to identify for the what purpose, what is the supply. Then the three activities they are doing. Now we can analyze. The graduation ceremony of the students held in Australia. Now, next one. The main revenue stream of EESL is the grants received from EESA to conduct its activities. Lamai, what are its activities? What are its activities? First one, student enrollment work in Sri Lanka. To do that, they are giving funds. Find partner organization for patriarchal sessions. Done. Thirdly, conduct an open day each year to reach out the students. These are the activities. All conducted in Sri Lanka. Okay. Then the next one, in addition, EESSL has sponsorship income from the partner organization for the open day. EESL has considered the grant received from the head office to be exempt from VAT, as EESSL is involved in providing of educational services. Now let me come to this first thing. This is they have mentioned they are in the providing of educational services. Now lamai, in this paragraph we have analyzed what are the activities they are doing, the three activities. In that, accordingly for this paragraph they are not providing educational services. In the VAT Act, provide the section 83, the providing of educational services, it's interpreted in that the technical, the training, the education, all these vocational training, all these things are there. But they are doing the student enrollment work, find partner, and this open day for the communication things. Then my conclusion on this, they are not providing any exempted supply as educational services based on, now you have to apply this paragraph. Based on the information provided, they are doing three activities, that all three activities are not exempted under the educational services. Done. Then this is the first one. Done. Okay, that explanation given. Now let me come to second question. In that it asking zero rate as per the provisions of the VAT Act. Now they are providing a service lamai. To service to be a zero rate, what should be happen? You have to provide the services to the person outside Sri Lanka. You have to provide the services to the person outside Sri Lanka. Now, in here, what is the first thing? Service outside Sri Lanka, and for that particular service, you should receive the income in foreign currency to your bank account in Sri Lanka, but bank account which is under the Banking Act. And what is the new amendments to section 7? It has very clearly given that income shall be received through within 6 months. Within 6 months of the that particular export of service happen. Okay. Then anything we need to clear down. To apply zero rate, this is a service, we need to look at, are they providing that kind of the service. Now come to this paragraph. The main revenue stream of EESSL is a grant received from EESA to conduct its activities. They are providing services to the foreign party. And now the question, when it comes to zero rated supply, it should be, now in our case, service. Now let me analyze one by one. According to section 7, to be the zero rate, that should be provided by a person in or outside Sri Lanka to the person outside Sri Lanka. Done. Second one, that particular person in outside Sri Lanka shall be utilized that outside Sri Lanka. Third one, it should be the income to the person should be received in foreign currency and to the particular bank registered under the Banking Act within the period of 6 months. These are the 4 things to be satisfied. Now my question is, for these things, okay, the revenue is 3 revenue, not the education. 3 revenue is from the supplying services to person outside Sri Lanka, EESL, done. And it's a receiving in foreign currency through a bank within 6 months, we will assume that. Now my question is this utilized outside Sri Lanka? Lamai know all these things, this total, it is utilized in Sri Lanka. Then according to given information, now see all these things in Sri Lanka, you have to analyze that theory to the given scenario. Accordingly, no, it's not a zero rated supply. And then this is not exempted, this is not zero rated. What are the conceived? This is liable. This is liable at the, now for your period, it is the 8% is a tax rate, but now it's a VAT rate 8%, but for now the time I am speaking now it's a 15, but for your exam it's the 8%. Clear? Then it's 8%, they're liable. Then whatever the input VAT they can claim. Now there is an issue. They are asking, are there any consequences for the past period? Of course, yes. In one part, they have not paid the output VAT on the their revenue, which is they have taken it as exempted. Okay, for that they have to pay the VAT. Now on the other hand, on the claiming of the input VAT, I think because they have taken the educational service as exempted, they have disallowed the input VAT, whatever they have incurred. Clear? Then the 2 drawbacks they had for the past period. To pay output VAT and that disallowed input VAT, it's a disallowed. Okay? Then any consequence is that. Now come to next one. Come to next one, which is it's on the 5 marks. Then come to part C. I don't know what happened in here. Then okay, in the part C, now come to the part C. The 5 marks done for part B. Now I need to come for the part C. It is again the details provided. Let me explain what is the requirement as. In the requirement, it has asked the required advice on, you have to provide the advice on what VAT liability of STPL. This is my so-called company, STPL, in relation to the clinical database management service. Where this is in the Gazette notification. Which Gazette notification? On the VAT taking into information technology enabling services. this one. Then we have to advise on the VAT liability of the STPL on the clinical database management service. How to advise? You are expected to cover provisions of the VAT Act and the related Gazette notification in relating to application of the VAT rate, exemptions and the input VAT. If it is exempted, input VAT shall not be claimed. If it is liable, it is maybe 8%, maybe 0% based on the scenario, input VAT can be claimed. Okay? Now come to the details of the question. In here, Supertech Private Limited, STPL, is a limited liability company incorporated and domiciled in Sri Lanka. A company registered in Sri Lanka, incorporated in Sri Lanka, being a resident company. It provides, what's their principal business activity? It provides IT related services. Okay? During COVID-19, STPL started the new segment of the business. They have started the new segment of business, that is clinical database management services for US company named Data Management Inc. DMI. Now they are providing services. What's the service? It is a clinical database management to whom a company incorporated in other countries, the US company, for US company name DMI. We are providing services to a person outside Sri Lanka, which is utilized outside Sri Lanka. Done. Now next paragraph. DMI obtains contracts from US companies. Now this is talking about this our customer. Okay, this is on that. DMI obtains contracts from US companies from the clinical database management services mentioned above and subcontract such services to STPL. That's how they are receiving this project. Per the agreement between STPL and DMI, STPL issue invoices to DMI in US dollar. Okay, on weekly basis. DMI will settle the invoice upon the receipt of the funds from US companies. Now this time of receiving funds from the US company not given. It's 6 months, below or over, we don't know. Then to be the zero rate, it shall be services provided to the person outside Sri Lanka, to be utilized outside Sri Lanka and received in foreign currency. All satisfied, but it should be received to the bank to Sri Lanka within 6 months period of the invoice. Now that provision satisfied or not, we don't know up to now. Then the agreement further stated that STPL is required to purchase the clinical data collection tool, particular software, from a vendor recommended by DMI. Then we have to make the payment to them. This clinical data collection tool is supplied by a vendor in the US and STPL is requires to pay 15% of monthly fees from the monthly revenue collected from the clinical database management services to vendor of the software. How the payment going? Payment, this clinical data collection tool is supplied by the vendor in US, and what I have to do, being STPL, required to pay 15% a monthly fee. It's monthly 15%. We have to pay for the monthly revenue collected from the clinical database management services to the vendor of the software. Now, all analyze what's the requirement advice on VAT liability of STPL in relation to clinical data management services. Providing of this service is a 0 rated, but as I have explained it, it's 0 rated, but the thing is, we don't know whether it's receiving from the 6-month period or not, the cash receiving. Then again, when it comes to this application of the Gazette notification, when it comes to the application of the Gazette, what it has mentioned. In the Gazette, now let me come to the Gazette notification. In the Gazette notification, what it has given. This is the Gazette with reference to the value added tax. Then it's the talking about the exemption on the IT enabling services. What it has given, adoption, upgrading, enhancing, implementation and similar services related to any type of software developed in Sri Lanka. That's the first thing. Then after that, this particular services given. Now I need to come for para 3, which is relevant to you. Provision of following back office services. We are providing the support services by a local institution. Yes, our company is a local institution. Or a person in Sri Lanka to any person electronically or by using computer system or mobile electronic devices. What is that? It is the clinical database management system excluding clinical trials. If it is so, then for this to satisfy what it has given, the part 2, in the case of the services referred to in part 1, in the case of the services referred to in part 1, this is in the part 1, even this clinical database management system, it is in the part 1. In the case of the services referred to in part 1, other than services referred in item 1 of the such part, minimum local value addition should be not less than 50% of the gross income of each such service. Now in our question, what it has given should not be less than the 50% of the gross income of such service. Now in our question, Lamai, it has given what it is this clinical data collection tool is supplied by the vendor in the US and STPL is required to pay 15% of the monthly fee from the monthly revenue collected from the clinical database management service. Then this is only 15%. It's not the 50% value addition from the revenue, it's only 15%. Then thereby, even it's a clinical database, then the VAT liability on the clinical database based on the available information, it is, since it's only 15% value addition, we cannot take the exemption as per the Gazette notification. And here, when it comes to application of the 0 rated supply, we don't know what's the period of getting cash. It has given once they received the fund from the US companies, we don't know what's the time limit. With the assumption, if it is received within 6 months, yes, 0 rated, we can apply. Input VAT, we can claim as a refund. Secondly, if it has not received within 6 months, it's not the 0 rated, then we cannot apply the rate of the 0% term. Then it's basically open answer we have to provide. Then it is based on the information provided, it's a other than the 6-month provision. This is the provision of the 0 rate, but the 6-month provision is not clear. Okay? Then this is the end of the discussion of the question 2 of your paper. Then afterwards, let me come to this one. With this, your total, the recent paper, the July 2022, which is your SL3 paper, all the question discussed. Most of the cases not gone for the detailed answer, but answer format and the explanation, the address to the action verbs provided to you. Then let me finish off this discussion and what I need to say. 4 things I need to communicate. Paper is not a difficult paper. If you have well prepared for examination, of course you can do this. All of y'all can take 50 and more than 50 and pass this. It's done. Second one, please go through 100% of the syllabus. Please practice all the past papers, including mock paper as your time and everything. Don't look at the answer and don't look at the paper. Do it, time it, and please do it. The practice is matters for your examination. And the next one, take the maximum time out of the reading time of the 15 minutes. Take the advantage of that and manage your answer, plan the answer, write a logical, practical answer without writing a mere theory. Then finally, which is you have to address the action verb, read the requirement carefully, analyze the requirement to sub-requirements, and based on the marks allocated, allocate your time and do the exam. Okay? I wish all the very best for all of you all for the upcoming examination. Thank you.